Hi, this is Kim Watson. Welcome to a weekly outlook on Tuesday, the 20th of February. Now, before I get on with the market outlook, got quite a lot to do there. Let's just have a look at what's coming out this week of significance. Now, we've already had Monday. Tuesday is very little out today, and then Wednesday. Wednesday, we've got some key data coming out here in the morning, 8:30, 9 o'clock. 8 and 8:30 are the two key numbers that come out. Now these used to give us about a 20 pip kicker, so they used to be good for around about 20 pips or so, a bit more if it all went together and was positive. Now the more important thing about these now is they've been rising and rising for quite some time, and it's possibly at some point you see them plateau a little bit, but if they continue rising, well, of course that will be very positive for the euro. It's showing sort of at grassroots levels, it's manufacturing and services, the state of the economy from that perspective, and is an early indicator of continued growth, of course, so quite important there. Later on Wednesday, we've got the average earnings from UK and claimant count change, etc. So the average earnings is the main figure in that. It's an employment report that's actually coming out, but we just get so focused, and it's pretty good that people are focusing on the right parts of it at least. So average earnings is the key point now on 9:30 Wednesday morning. Inflation report hearings, well, the report's already been out. Now, we could still get volatility when Carney, etc. speaks. There's a number of them will be questioned. And at such hearings, we may get things that are not necessarily in reports, so you'll get personal reviews, etc. And it certainly can create some volatility in the market there. Existing home sales, well, that's orange yet, I still don't know. But the FOMC meeting minutes, I do understand why that's red. Very important. Whilst we do get comments after the meeting by many of the members, the minutes still managed to give an overall warts and all view of what's been said. So that can create some volatility there on Wednesday afternoon, or evening, should I say. Okay, leading into Thursday. Second estimate GDP, they don't generally, I could show you historically what they are, and they don't move too much. That most likely, as much as if it did come in more positive or worse, would certainly give us a kicker. The times that actually happens is very unlikely, however. I've now said that, so it will happen. Policy meeting accounts we got coming out at 12:30. I said last month, I think it was, or the month before, these don't do anything. And sure enough, we had quite a kicker last month. Now, I've just noticed there's a note here. I was just looking to see if there was any reason why there was a note there. No, there's no reason why there was a note there. But I could see. But those meeting minutes last time caused one hell of a stir because Draghi had lied at the meeting. Anyway, I might as well call a spade a spade, eh? Anyway, Canadian core retail sales, maybe a bit of volatility, 1:30 Thursday afternoon. But the side of that, then we left down to speakers and what they're speaking. You speak a banking outlook conference, okay. Not really going to be causing us too much volatility at that time of the evening there. Okay, and Friday, a relatively quietish one. We have got Ramsden speaking there at 12 o'clock. It's a panel discussion tackling the UK's productivity challenge. Okay, not a major mover, I wouldn't have thought. Not much will come out of it. And then we got CAD, and then we got a load of FOMC speakers running through Friday afternoon, which could always create some volatility depending on what they're doing. But when they start sitting in these panel discussions about Fed balance sheets and things like this, well, we'll see. I think there's a few of them. There's 3 of them speaking, so just watch out for around those periods. Okay, that's pretty much it news-wise. There's more there than I thought. Before we start looking at the Forex markets themselves, I just thought, well, let's look at the 10-year notes and see what's happening there, because we obviously seen a bit of a dip on the pound and the euro, and I just thought, well, okay, why is it dipping? What's actually happening is money coming back into bonds, and you'd have expected a lot more movement into bonds than what we're seeing here. In fact, with the blip tied up a couple of weeks ago to the stock market there, aside of that, money's coming out of the bonds. So it really does show this sort of continued dollar sell in general trend at least. Doesn't seem to be much of a let up on that. If you look at the dollar index, of course, it's seen a bit better time, but it's still choppy around it where we are at the moment from a weekly perspective, and it's pushed up a little bit at the moment. Of course, we could just look at the euro because it shows me almost the same picture, but it's inverted. Here we go. So let's have a look at the euro dollar and get cracking. So euro dollar, there you go. A bit of divergence into the highs there. We may get a bit more of a retrace from where we are at the moment. It's choppy to say the least, although in the shorter term there is a sort of short term trends kicking in here. Just looking from this daily perspective, we could be coming off some more. It certainly looks like it may, from what I'm looking at here. Next point, well, you could get a test of the monthly pivot there. But at some point, I think it will become a buy again. Whether it gets back to the trend line, back to this daily trend line, which may correlate with the pivot in next week or this week, we'll see. But either way, it's in the short term, intermediate term, there's certainly it's more weak than anything else. So a bit of dollar strength coming through. Big picture, I just think, well, this could change quite significantly and quite quickly. Looking at the pound, again, I'm just taking a weekly view here first, and I mean it's still in that rising channel. It stayed in that channel most of that time there. Okay, didn't have the legs to push up there and make the new high recently. It's a bit weaker in that respect. However, some news out this morning that the European Council going to offer government going to offer a better deal and a special privilege deal for the Brexit. Give it a kicker, and well, it wouldn't take too long to see maybe that work through in a more positive state potentially. I would like to see it correlated with the euro. It's holding its own at the moment there, but I just like the markets to be more correlated. But there is reason, or allegedly reason for cheer, but we've got plenty more potential spikes, etc., that could affect this. Okay, dollar yen. Sold off. I was looking for some support from a monthly point of view. There was not significant. I find there it even came short of its monthly S2, so it didn't even quite make that. So but however, it's bouncing at the moment. There may have been other factors that just held it, but the weekly last week's S3, that was what caused it, kept it up. I just needed to pop back and look at that. Is this sell point over? Not necessarily. Again, I'm just sort of looking. Bigger trend is still down, and at some point, again, like the euro, I think we could see a retracement on this. I say retracement, a turn back in trend. Of course, the FOMC minutes later in the week could spoil that a little bit. We'll see, or may just help towards it. Australian dollar weekly perspective, well, got a decent bounce last week, but not really hanging on too well this week. But it's not really selling off too much either. It's a quite consolidated couple of days. Yesterday really didn't do too much at all. Sold off a little bit today, but it's just quite range bound here. And well, perhaps at some point, whether it gets back to that 50 or not, we could see the break back to the upside there. There is a decent trend line to be drawn across, if I can put it in the right point, probably across the highs from around about here through, and that may just give us a sort of the more obvious pointer. There we go. So we got this sort of wedge forming here, so it may give us an obvious pointer towards a continuation if it does push up to the upside there and carry on. Okay, and finally the Canadian dollar. Canadian dollar's been again range bound. You look at last week, the whole of last week engulfed by the previous week there, so not getting the same. This certainly drying up in terms of volatility, but whenever we see this in this market, it doesn't take too long and all of a sudden it gets a kicker again. But at the moment it's erring to the upside there. and is sort of coming out of this sort of flaggish pattern. Maybe if we do see continuations in these markets, we could be pushing up. But once again, I'd be looking at maybe the trend of change, short-term trend line going across here. There's the bigger one running from the highs here, which not quite got up to yet, but you can just, again, you see the range it's in. It could chop in this range all over. I mean, I would like to see it either test the upper side there and roll, or do something. But at the moment, it's as I say, relatively range bound still, the Canadian dollar. So that's pretty much it. The market's pretty much the same. I just would look at the S&P futures here. Briefly from a weekly perspective, that cough that it had a couple of weeks ago, it seems to be over it. It's testing its weekly 8 moving average at the moment. It could roll off if we just consolidates here. I wouldn't be too shocked if it just pushed back up again and ran back towards that monthly pivot. So something got the potential. Right, that's it for me. I'm going to call it a recording. So it's a recording. I'll catch you next week. Bye for now.